March 27th, 1980. Wall Street is on the brink of contagion. Two Texas oil billionaires, Nelson Bunker Hunt and William Herbert Hunt, have just defaulted on a $100 million margin call. Over the previous months, these brothers and their offshore partners had quietly seized control of roughly 1/3 to 1/2 of the world's privately held deliverable silver supply. But today, their highly leveraged empire is unraveling. In a single day, the market collapses, slashing silver prices by roughly 50%. This is the story of how a plan to protect a family fortune almost broke the global commodities market.
The story begins years earlier. In 1974, Nelson and William inherited an oil fortune estimated at $5 billion. But with the end of the United States gold standard and inflation running rampant throughout the 1970s, the brothers were worried about their immense wealth losing value. The Hunts would later maintain that their strategy was not an attempt to corner the market, but simply a rational investment to preserve capital against fiat currency inflation. As a hedge, they began buying physical silver, taking actual delivery of the metal when it was trading around $2 an ounce. By early 1979, silver was trading near $6 an ounce, but the Hunts wanted more. They partnered with Saudi investors to form the International Metals Investment Company, using massive amounts of margin debt from over 20 financial institutions to accelerate their purchases. Relying on just about $1 billion of their own equity, they managed to amass a staggering silver position valued between $4.5 billion and $6.8 billion.
The strategy worked with terrifying efficiency. Over a 12-month period leading into early 1980, the market price of silver surged by approximately 700%. The sheer scale of the Hunts' holdings remains debated by historians, with estimates of their total position ranging from 100 million to over 200 million ounces. The exact peak price is also contested, depending on the index, but between January 18th and 21st, silver hit intraday highs between $48.70 and $50.35. This massive squeeze severely strained industrial consumers. Tiffany & Company even took out a full-page advertisement in the New York Times, publicly condemning the brothers for artificially inflating prices through hoarding.
With the market warping around the Hunts, the financial establishment moved to cut them off. Federal Reserve Chairman Paul Volcker aggressively raised interest rates and ordered banks to restrict speculative lending, suddenly choking the Hunts' credit. Then, on January 7, 1980, the COMEX exchange enacted Silver Rule 7. This halted margin purchases entirely and restricted trading strictly to liquidation. COMEX officials formally stated this was a necessary risk management measure to prevent a clearinghouse default. However, some precious metals commentators have speculated that COMEX board members themselves held substantial short positions and implemented the rule specifically to trigger a price collapse and protect their own portfolios.
The trap was sprung. Cut off from new credit and unable to buy more silver on margin to support the price, the Hunts watched their portfolio slide. On March 27, 1980, the Bosch Group brokerage firm issued a $100 million margin call. Over-leveraged and out of cash, the Hunts defaulted. The resulting panic caused silver to collapse roughly 50% in a single day, plummeting from over $21 down to $10.80 an ounce.
To prevent the Hunts' default from triggering broader Wall Street contagion, a consortium of United States commercial banks had to arrange a $1.1 billion credit facility to help them settle their debts. But the fallout was severe and lasting. Following extensive investigations, federal regulatory agencies and civil courts formally ruled that the Hunt brothers had engaged in illegal market manipulation and a conspiracy to corner the silver market. By the late 1980s, they were ordered to pay massive damages, hit with millions in fines, and banned from trading. Nelson Bunker Hunt
was ultimately driven into bankruptcy.
The Hunt brothers believed they were acting rationally, protecting their immense wealth from a broken fiat currency system. But by using billions in borrowed money to dominate a single global commodity, they crossed the line from defense to manipulation. Their scheme revealed a stark truth about the financial markets. When a player gets big enough to threaten the system will simply change the rules to survive.